A higher U.S. dollar and lower oil has certainly impacted the domestic markets, but we haven't heard much about what's going on with the emerging markets. Is that one whole portfolio, or how do you position them, Evan?
Well, actually, Jill, we see emerging markets as a very, there's a disparate asset class. A lot of investors see it as one asset class, but in reality, there's so many different economies that are affected by all the fundamentals going on with oil and with the dollar and so forth that we actually think you need to be very specific in what emerging markets you
So
invest
as
in.
an example, with the higher dollar, does that impact one or the other in a different way?
Yeah, the higher dollar really harms countries that have a lot of debt in U.S. dollars, denominated debt. So there's $4.5 trillion roughly, predominantly in Asia, that's in U.S. dollar denominated debt. Those countries that have those debts need to pay it back. Obviously, as the dollar goes up, it's more expensive for them to pay back the debt. So that's a big concern.
Well, let's talk about a market that the traders have been positive on, and that's India. We've been waiting for a pullback there because it's had a great run, and you're sort of mixed on this one.
Yes, I mean, I agree with India that it's attractive for a lot of reasons. I mean, there's the prime minister and some of the government change is positive for the economy. It's an oil importer, so obviously low oil prices in that economy is a good thing as they continue to use more cars and so forth. But in the short term, there are some challenges with the infrastructure and some corruption issues and so forth. So in the short term, I agree. We're waiting for a correction before we jump in.
Well, you know, it's interesting that you're talking about not looking at them as one entire asset class, because while people have been positive on India, they've been very negative on RSX, which is Russia. So that's where those two ETFs are different. Are you still just not, is there a future there?
Russia, we're staying away from. We're very concerned about it. Obviously, there are some hedge funds who are making big bets on Russia because it's priced almost to fail. I mean, it's at Depression-era valuations for whether the United States in the 30s. But our concern is you've got such a dependence on oil exports. We know at oil where it is per barrel. They're not making any money. Obviously, their economy is shrinking. We're guessing about 4% this year of a contraction. That's one of the largest in the world. And they're starting to become more unrest. So we think that Russia, although it's cheap, is probably going to get cheaper.
Okay, thanks very much, Evan. For The Street in New York, I'm Jill Malandrino.